Hi, I'm Patu from freefincal, and today I've published my handpicked list of mutual funds, which is known as PlumbLine, for the last quarter of 2019. I have added several new graphs for each funds talking about their which describe their market cap history and asset type history and so on. So the best place to read about it and understand is via my post written today. I'll link it right here. But I'm going to give you an overview of all the categories and the funds listed in them in this video. So before we go ahead, there's a long disclaimer about who should use it, when to use it, how to use it, and the warnings associated with it. I would strongly advise you to read it before watching this video, but because I can't get into that here, that would be uh, boring. So the gist of it is that the PlumbLine was created to accompany my robo advisory template. The template is paid, but the robo template is paid, but the PlumbLine itself, the list itself, is free. Anybody can use it. New and old investors can use it. I am invested in several of the funds. There is disclosure in each of those categories about my holdings and what I have done with it. And what else? So you must have a goal and you must have a clear portfolio idea. Before that, you cannot jump in to use this list. So with all that said, let's get on to the list. So the first category, so there are, if you notice here, there's something like 11, how many are there? 20 categories, about 19 categories, because there are no large cap funds recommended, there are no small cap funds recommended. So there are 19 categories, or some of them are just mixing of, or just blending of the index funds. So it's about 15, I would say. So let's get to overnight funds first, and we'll take it from there. So in this category is for those who want, you just want to park money for a few days or a few weeks, or who don't want any kind of credit risk or interest rate risk. Then you can choose it. You can just choose a fund with reasonable AUM and very low expenses. L&T Cash Fund, the direct plan, has got decently low AUM. There are has got decently high AUM and low expense ratios. Expense ratio. There are funds with higher AUM and lower expense ratio, but this is all right. You can choose any fund. It's not a big deal in this category. You can see here that the AUM has fluctuated quite a bit in this fund, but that's fine because every day it's like a new portfolio. So every day it's a new mutual fund because of the overnight bonds. So it can handle these kind of wild swings. There's now no problem to the NAV at all. So don't worry too much about all that. The next is liquid fund. I recommend only quantum liquid in this. You can use it for anywhere from a few months to anywhere above that. There are some changes in the SEBI regulations about this and so on. They have to be marked to market, but quantum liquid fund has been marked to market from day one, so there's no big problem in it. You won't have much of a problem. It has not held any risky bonds for the last 3 years, more than last 3 years. It held some little bit of double A rated securities somewhere in early 2015, but since then the portfolio is quite clean. It holds only sovereign bonds or highly rated short-term bonds, so it's not you won't have much of a problem in it. It won't buy it. It won't take on corporate bonds and take on that kind of risk. So you can buy it. I mean, in terms of risk, it's one of the lowest in the fund category. In the liquid fund category, you can see that the AUM of this fund has almost doubled in the last year or so, maybe a little more than that, which is a good sign. So the next is equity arbitrage. You can use arbitrage funds. I am invested in quantum liquid, by the way. I'm not that. I have a little bit of holdings, but yeah, I have some skin in the game. I use ICICI equity UTI arbitrage, so I got rid of it. It's no longer there because of the way it handled the DHFL crisis. I don't like it, so it's gone. I use this fund as part of my son's education portfolio, and also my wife also invests in this fund in her own portfolio, in her own what do you call folio. I think it's part of our emergency fund, and so that's it. So there are two separate holdings in this fund. This is a very tax efficient way to hold some money And in case there is a crash, I can take my arbitrage holdings and shift it back into equity for my son's portfolio. That kind of thing. It works very well for that. Especially if you are in the 30% slab or even 20% slab, this works quite well for you. So this is the portfolio history of the fund. It has had a little bit of AA ratings in the past, so you can get some credit risk issues with it. It is available. That credit risk is non-zero in this, but that's fine. I mean, you can't worry too much about then you can't barely put your money. So I mean, not worry too much about it. So in terms of asset allocation, you can see here that's the arbitrage in orange. The others is basically should be cash, repo in FDs. There are FDs in this. I think there are some RBL bank FDs. This fund has got some RBL bank FDs, but well, we can't do much about that. So there are some bond call options, repo investments in the gray others regions. This is the arbitrage region, and that's the bonds held. So the next is the ultra short term or the money market category. The money market is in my opinion, is like an ultra short term debt fund, but it's got lower risk. I recommend Franklin India Savings Fund. This is a very unique Franklin fund. It's got probably the lowest of credit risk. You can see the kind of papers it's holding now. You can see the change in the credit profile after it went from savings plus fund to savings fund. So there's a change in the credit profile and so on. I've talked about it. But in terms of credit rating, most of it is A1, A1 plus kind of bonds, A1 minus kind of bonds. It did hold corporate deposits, but it stopped that. You can see that here. The corporate debt has come down. It is not holding any more corporate debt. It's fine. So it's a fairly safe. In the Franklin universe, a fairly safe fund. Therefore, I recommend it. And you can also see the maturity profile has changed. Earlier, it held longer term bonds, but now it's only about most of the bonds is about 12 months that mature within 12 months. So the interest rate risk is not too much. You can hold it for a long term goal as well. This is what for those who are scared about credit risk, interest rate risk, this can be part of their long term portfolio. The next few categories are going to be very high risk debt fund categories. So I'm not going to go too much into them because most of the investors don't care about high risk. But if you are a high risk, if you can handle high risk in debt funds, credit risk, that's what I mean, then you can consider this. So this is a high risk. This is Franklin India Ultra Short Term Bond. This is an extraordinarily risky fund. It gives a feeling for investors that's walking on water, creating a miracle, but it's actually walking on fire or walking on a wire, whatever you want to call it. You can see here that there were 6 bond downgrades from July to August 2019, and there were 6 other different downgrades from June to July 2019. So it's like an everyday affair. I've listed the downgrades here. Don't be very, very careful. Don't look at that 8%, 9% return and get lured into this fund. It's very, 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 very risky. Be very careful. Of course, because it's Franklin, you have some kind of you feel that they will buy that bond and they'll buy the defaulted bonds and save investors like they did in the past. They will do it without thinking too much about it and so on, like HDFC did, but we have to see. So this is the rating history of this fund. It does have most of it is extremely, the orange is AA, AA plus, AA minus. The gray is A plus, A minus. So it's got extreme credit risk. I'll do a full review on this fund. Medium duration, more than 5 years. Forgot what did I mention this as 1 year and above is the high risk. 1 year and above is ultra short term bond. This is for long term, more than 5 years. Franklin India Income Opportunities, again a bond that has got very high debt fund that has got very high credit risk. You can see these kind of downgrades from June to July 2019. You can see how the portfolio has changed. It has gone from it was earlier before the SEBI category change. It was a short-term bond fund. Then it became a long-term bond fund. You can see the yellow above 5 year become higher since in the recent past. You have to be very, very careful. It takes on extremely high credit risk. That violet is A plus, A minus. The orange is AA plus, AA minus. So most of it has got high credit risk. Be careful. Then this has got the next fund has got even more. This is corporate debt fund, so it's got not as much. It's kind of in between in terms of credit risk, but you can still use it for 5 years. It's got slightly lower risk. It will invest most of its. It will invest a major chunk in PSUs rated AA plus and above, but still other bonds will have higher, credit quality. So you have to be careful. This also has seen some credit events. You can see the maturity profile. Most of it is 1 to 3 and so on. So a little bit above 3 to 5 and so on. So don't use it for short term. And the AAA bonds have increased after the change in the SEBI regulations, but there is a good amount of blue color. That's the AA bonds, AA plus, AA minus. So be careful. There's some B, triple B bonds and A bonds and so on. So you got to be very careful with this fund. It will give you a feeling of safety, but it's got that small amount of credit risk present. And then this is a credit risk fund. So what will you get in a credit risk fund? Credit risk. So again, this is for people who are extremely adventurous. Be very, very careful with this. It's going to be extremely risky. From July to August 2019, that many credit changes have taken place. You got to be very careful. If for a very long-term goal, if you don't want any kind of credit risk, then you can use SBI Magnum Constant Maturity Fund. But you should know how to do portfolio management. You should know how to rebalance your portfolio either tactically or systematically. I have a review on this. Please go through it and then consider this fund. Now we come to the equity mutual funds for tax planning. I've always said there's really no need for ELSs if you can manage with PPF, EPF, NPS without any debt and so on, because ATC is only 1.5 lakhs. There's real no need for ELSs funds. Don't get into them. But if you can understand asset allocation, if you have a proper asset allocation and still feel you need ELSs funds, very few will. If you still need ELSS funds in your portfolio, I recommend the Birla Tax Relief 96 and the DSP Tax Saver Fund. This has got very good performance consistency against the Nifty Large Mid Cap 250 index from my screener data. So those are my picks. You can also try your luck with a new fund, which is Parak Tax Saver Fund, which will give you a low volatile kind of portfolio. You can try that. So that's one way to go. All right, so that's that. I've also talked about their market cap. You can see that the Birla fund has got it's a balanced large cap, mid cap, little bit of small cap, whereas the DSP Tax Saver is largely large cap. Then aggressive hybrid, or earlier called balanced funds, I recommend HDFC hybrid, or earlier called HDFC balanced, or Franklin balanced, or Franklin hybrid, or ICICI equity and debt fund. They've got reasonable performance record against Nifty 100 itself. Of course, HDFC fund is a little more conservative with respect to Nifty 100, but it has done well. So you can have a look at their large cap, mid cap allocations and so on. I don't want to talk about everything, otherwise the video will get too long. So I see multi-asset. This is for funds. This is for people who want a lower volatility. It will invest 10% minimum in gold, bonds, and equity at all times. I hold this fund when it was an ICICI Dynamic. This is for my child's education goal, and it gives you fairly stable kind of returns. And it's also this fund. What I particularly like is it's equity oriented in terms of taxation. Equity multi-cap, I hold Parak. This is one of my main holdings now in my retirement portfolio. This has got international exposure, it's got low volatility, and it's got good performance. I used to recommend quantum long-term equity, but I have stopped doing it for new investors. Old investors will have to take a call about what to do. Personally, I have not exited my holdings, but I have started investing in other funds like Parak. What is the other fund I hold? The balanced hybrid for my retirement. And therefore, my portfolio earlier it was one third. It has come down from 33% to about 23% because I'm investing in the other funds. So it's essentially, there'll have to be. They are going through. I don't know what they're trying to do because this effectively is there only one fund. I mean, all the other funds are not popular. They'll have to. they can't be too pig-headed for too long, and I think it's still a good fund. I don't deny that, but they'll have to do something about it to show the world that they're actually um, capable of performing or outperforming. So that's that. Then we have the index funds. I've talked about this. You can use your index funds in different ways. If you want only large cap, just use UDI Nifty fund, HDFC Sensex fund, or if you want a high risk version, you can use the DSP equal weight Nifty 50 index. It's very risky compared to. Wow, I'm sweating a lot today. It's extremely risky compared to Nifty or Sensex, but if you prefer that kind of thing, if you have that kind of a risk appetite, you can choose it. Then large plus mid cap kind of combinations, you can use UTI Nifty Next 50 and um, you have to find a blend between the Nifty Next 50 and Nifty 50 index. For Nifty Next 50, I've recommended UTI or the ICICI fund. You have to mix it with Nifty 50 in a suitable way. My suggestion is don't go beyond 30 or 40% of Nifty Next 50. It can be too risky. If you want a Nifty 100 kind of performance, then stick to 10 to 20% of Nifty Next 50. That will be enough. So there's a high risk, medium risk. I've offered different kind of suggestions. Don't worry, you can read about it. This is what I just said. Please look at the article. I've not been recommending large cap because none of them are able to consistently outperform Nifty 100. So there's no point. For balanced advantage, I recommended ICICI Balanced Advantage. It does a good job, low volatility and good performance. It has done well. I have shown the kind of funds that it holds. You can have a look at that from the article. So that's about it. For finally, equity mid cap. There are 4 recommendations here. 2 new ones. The old ones are Franklin Prima and HDFC mid cap. They have done decently well, but I think for the last couple of months, I've been noticing L&T mid cap and Kotak emerging equity. They have done slightly better than these 2 funds, so I've added them. Because over 1, 2, 3, 4, 5 years they've bet in terms of risk and reward Nifty mid cap 150 consistently. So I've added L&T mid cap and Kotak emerging into to this list. So this has got 4 funds. So Prima and HDFC mid cap are also doing well. It doesn't matter. New investors can choose any of these funds. So that's about it. I've done. I have some videos on these reviews and so on. That's it. Frank, equity small cap, I do not recommend. I've shown I have a reason why I don't do that. So that's PlumbLine for October 2019. I'll try and offer an update on this in January 2020. So if you have any questions, comments on this, please let me know. Thank you all, as always, for watching.